This program was first broadcast on Canterbury's access media station, Plains FM, and was made with the assistance of New Zealand On Air.
Welcome to your weekly dose of the Accountology Show. I'm your host and chartered accountant, Nicole Haig, with an insatiable curiosity for uncovering accounting ideas to help businesses grow. I have so many nuggets of gold to share. Are you ready to make your good business great? Let's get stuck right in. Hey, it's your hosts Nicole Haig and
Alex Fulton.
And welcome to another exciting episode of the Accountology Show.
Ooh, we're right into the new year now.
We are.
And I guess, people might be thinking about buying a house maybe.
You've been lying on the beach, listening to the birds and the waves.
Thinking, I want to move here.
Dreaming about a new property.
Yeah.
So, who better to go to than last week's guest, yes. Antonia
McAtamney. We had Antonia on last week, and she was talking about being a mortgage broker.
Yep.
And I certainly learnt quite a lot. There was a lot more in it than I had previously, which is not surprising actually. But
no, but you're right. But I think that, and as she identified, I think a lot of people think, I just need someone to get a mortgage for me, which would be super easy, and so I can get the best rate.
Yeah, or would I think, I could do that myself. Yeah. I don't need to pay someone else
to do it, except you're not paying, the bank's paying.
That's right. So that's right. It's all coming back now. So Antonia is the mortgage broker working for the client,
correct,
but the bank pays her.
Yes,
exactly. It's all very fascinating, and I certainly learned a lot more. So if you don't know about mortgage broking, it's an episode to go back to and maybe reiterate. And today we're going to just talk a little bit more about mortgage broking, about types of loans.
And just reiterating what Antonia discussed last week.
Yeah.
To make everything nice and easy for you, if you are looking for, maybe it's your own home or you're wanting a rental property or a batch.
Whatever it might be.
She did mention commercial properties, but that's not so much her forte, it's more the residential.
Yeah, finding people's homes. Actually, I was thinking about this, we obviously talked about how she works and how it operates with her, approaching different banks and having knowledge of different banks. But if we bring it back to accounting, Nicole, and probably something that you could help with, do you have to be kind of book ready before you approach someone like Antonia?
Yes, 100%. So regardless of whether this is for a business, such as a rental property, or maybe a batch, which is a mixed-use asset, potentially. Maybe you're going to purchase a batch for your personal use, but you also want to rent it out to generate some income, which is called a mixed-use asset. Mm-hmm. There are definitely a lot of things that you need to have in place to begin with. So if you do have a business, then the idea is to have your accounts ready. So they need to be tidy anyway. So then you can effectively get your accountant to start them as soon as the new year has rolled over, the new financial year has rolled over. Then because the mortgage broker is going to ask for the most current set of accounts.
Yep.
And if we were partway through a financial year, they may ask for, let's just use the 2024 financial year.
Okay.
The financial accounts for March 2024, but maybe we're in October 2024, and that's when you're applying for a loan. Then they may ask for some management accounts, maybe just your profit and loss from year zero.
So the last 6 months.
Yeah,
4 months.
Correct. Just to see how you're tracking, and then they can annualise it to make it what it would look like for 12 months.
Beef out the...
Correct.
Yeah.
Correct.
Got you.
If you don't have all of that in place and you haven't got everything reconciled in your accounts and everything's a mess, it's going to take so much longer. But if everything is tidy, ready to go, then you're ready to pounce. Otherwise, you're going to have to spend a bit of time getting everything tidy, everything reconciled.
Or Tony will sort of have to tell you what she needs in order to go.
Correct.
So correct. You're being a little tidy Kiwi.
Yeah, exactly.
And getting everything sorted to go to that next stage.
You also need your personal financials up to date as well. Now, when I say personal financials, I'm meaning maybe you receive salary and wages. Now, this could be, regardless of whether you have a business or not, it could be your business paying you, or it could be you work for somebody else.
So this is if you're getting a business loan?
No, this is still if you're purchasing a residential property, but it could be this is regardless of whether you have a business or whether you are salary and wage earner for another business.
Yes.
The bank is going to ask for proof of your salary and wages. So you may give pay slips, or you may get a printout from the IRD that you can use to support that. But in addition to that, they're then going to be asking for proof of which bank account it has gone into, and then they want to have a look at what your
outgoings are.
Essentially your outgoings are. Now, if you recall, Antonia mentioned the triple CFA, which came in.
Oh, yeah, I don't really know what that is.
Yeah,
is that the...
it was quite tight regulations, and it virtually, as she said, I think it was from 40%, memory, 40%, that loans had decreased by.
We were listening.
So what happened then, though, if you may recall, because it was all over the media, was people were going for loans, and then they were having to almost show how many coffees they were buying in a day, because you had to show every transaction in your bank account.
Yeah, I've had a few friends talk about that.
Oh, and it was so tight and ridiculous, the regulations.
Yeah.
They've loosened that off a bit, but they still do want to see the bank account, because they are wanting to see not so much your personal coffees that you're buying now, but it's to confirm that what you're saying your outgoings are in actual fact true.
What they are, yeah.
And then maybe that you're not paying two sets of rates, because if you were paying two sets...
But this is just good housekeeping,
Correct.
Financial housekeeping anyway.
Correct.
Like, these are sort of things, as I've learnt, that we should be keeping on top of. And it's just good financial management. It's good financial health to make sure that...
Correct.
You know, like, we haven't talked about this, but, you know, like there might be a subscription that you didn't know about. There might be a payment that you didn't know about that you've just, for the last year, been paying and didn't realise.
So we always recommend that you are going through each individual transaction, regardless of whether you're a business or not. Because if you're a business, you're doing it anyway. But you may have a bookkeeper or somebody else doing it, so they may just automatically be coding it and not realising that you're actually...
And if you've got a bookkeeper, then they might assume that you know what
correct,
that is for.
Correct.
But then, No, I get that. Sorry.
So that's another one that we say you need to look at annually, have a look at what you're paying for subscriptions, because there's quite often things in there. You know, you may have signed up to Spotify and now you're not using it.
Well, you may, have done it twice under a different email. Like, I'm not, someone I'm sure has done that. Not me.
No, there's lots of stories like that.
Yeah.
So to make sure that that's nice and clean and tidy, but the other aspect of that is just sort of going off on a tangent a little bit, even your credit card, looking at each individual transaction, because do you know the amount of times that, and I've had this myself, where it can be a small amount, you might think, it's $3, who cares, I don't know where I spent that. The problem is that can be fraud, because what they do is they
trickle
something small to begin with, and then if they get that through, they go for something larger.
That sounds like my daughter. Maybe.
No, it just happens to her.
Yeah, no, as in that, they try a small amount.
She's the one
that
trying
came out on her 21st speech, actually.
That's so funny.
Trips to the dairy. But anyway, that's a different story. But I guess the bottom line is to make sure that you are financially...
it's that health, financial health. Making sure that it's nice and tidy. And then when it needs to go to...
someone like Antonia.
Correct. That you've got all of that information there.
So you'll be book ready, you'll look good, you'll feel good.
So the other thing is, and we find it with clients as well, even when we're trying to help them get ready for mortgages or loans in their business, is that they ask for... Well, I might say to them, what are your outgoings? How much does it cost to run your family? And they go...
You get blank stare?
I have no idea.
Yeah.
I have no idea. And... this is absolutely fine, because a lot of people actually
Well, there's no judgment. I can imagine you say that very nicely.
There is no judgment at all.
Yeah.
In fact, now we have a document ready for them to say, okay, well, let's work through this together. So
and to say to them, look, you're not alone. Most people don't know this, so this is a really good thing to know.
Even when you think of business owners, you might assume that they might know this. They don't necessarily. So,
their focus might be on something else, which is actually what their business is about.
So it's things like you might have a mortgage already. Mm-hmm. You might be paying rent, so it's to include those. What are your groceries? What roughly would you spend on that a week? What would you spend on education for your children? Extracurricular activities. Maybe you're at the local squash club or tennis club, or
it all adds up.
Golf club.
Yeah. And I think
gyms, memberships, your rates, insurance. And remember, insurance can get quite deep because you've got house and contents insurance, and then you might health insurance, and
we might need to put that on the list to talk about another time, because insurance in itself is quite confusing.
Quite a big one.
Yeah. I have questions.
We can address those. We can address those questions.
Great.
So to have a broad understanding of what those costs are as well, so then the bank has an overall picture of what's going on. But the great thing about having Antonia, or the likes of Antonia, is that she can have a look at the information you've provided, almost filter out and go, no.
Well, that's what she said, didn't she?
Yeah, exactly.
She was saying,
groom it.
Yeah, groom. That's a good one. Only in this context, but I think that what she was saying was, she can sort of look at what the client's needs are, and then sort of, work out which path is going to be best to which bank, to which lending.
When I say groom, sorry, just to come back to that, is a lot of people can put down a figure but not necessarily understand what that means, what the figure means. So it could be, so she might come back and go, okay, you've put quite a large figure for, I'm just going to make this up, your insurance, for instance. Is it really that high? Or she may go, your insurance looks really low. Do you think we've missed something out? Or, there could be questions like that she can ask, filter before it gets to credit, and then you don't have delays of credit then going through it and coming back with all of these questions.
Well, I thought what was really interesting, and I possibly didn't really connect the dots on, was that, she mortgages a loan, but it doesn't necessarily mean one lump sum, like she was talking about green loans, revolving credits. So splitting that money into different forms that suit different things.
Correct.
Yeah.
It could also be having splitting the mortgage between two and having one on fixed rate and one on floating.
Because that's what we spoke about. We thought that mortgage brokers are all about the rates, getting the best rate.
Yeah.
But
no,
turns out,
I think the hardest bit is actually getting the funds. So getting 100%. The funds from the bank is the first major step. And then the next bit, I think, is easy in terms of working out what the interest rate is, or working out
how you need that money,
or how to structure it as well. And like she said, if she can go for a little bit more, get a buffer. So then when you do move into the house, if you need new drapes, new paint, new carpet, new kitchen, you've got some funds
especially if you're
there.
A first-time buyer.
Correct. And you want to put your stamp on it.
You're mostly buying a house that might need a bit of a zhuzh.
Yeah, exactly. And I loved how you said that she was the fairy godmother of mortgages. I loved it.
Anyone who knows anything about anything other than what I know, are experts in their field. But she just seemed like that, very caring. She had that
authentic.
Nursing.
I think she was very authentic, wasn't she?
Very nursing background, which obviously gives her a lot of empathy.
And I think she would guide you in the right direction in terms of to assist you with, what structure to use, and like the structuring of the loans that we just talked about. But like you said, that green loan, I mean, that's fantastic, isn't it? But is that really advertised that much?
I didn't know about it until we needed to get a loan for a second house, and the first thing the bank sort of said to us was, do you need to renovate? And obviously we were going to renovate it, and part of that, she said, are you doing any green work on it? And that's when she sort of explained us about this green loan, which was obviously low interest rate. It's encouraged to do any, like we're talking about green as in things that are going to be sustainable. So I think last week I mentioned, like if we're putting a heat pump in, or what kind of, if we're putting solar heating in, or grey water, or anything like that, that is going to be sustainable or better for the environment. And so you are getting rewarded, I guess, right?
Yeah,
you're getting
100%.
a better loan rate for doing any of those. And she was really helpful about, if we'd say, does this come into it, or does this come into it? And she was like, yep, let me check, or whatever it was. Yeah, so, I mean, that's something that people might not know, but it's something that people could ask about, and it might affect, which bank you go to, depending on what they can provide. And Tony will know that.
Yeah,
and Tonya will certainly know about those sorts of things that maybe the layperson is totally unaware of.
Yeah, exactly. And point you in the right direction. And that, I think, comes back to you trying to apply for a loan on your own with your current bank.
Yeah, because I would think, why would you need a mortgage broker?
Yeah.
Obviously, my mindset has changed now.
Yes. Well, I think there's a couple of things here. And I think one is, gone are the days when you had a bank manager and you had a long-term relationship with that person.
Yes.
Have you ever tried to get hold of the bank and you can't get through to anyone? And then there's, firstly, if you can get through the bot, that will actually let you talk to somebody.
I heard that if you just went 1111111, it goes through to someone eventually. Anyway.
Really? You must try that.
Yeah.
It happens to me all the time.
Yeah, but no, you're right. I mean, the amount of times it's an automated service, or you're ringing someone on the other side of the world, or it just doesn't feel like
there's no.
you don't
it's not
have
personal
that
any longer.
You know,
is
that
it?
bank manager relationship.
Where you used to get
Which
dressed
is
up
fine.
in your suit and tie to go in and meet the bank manager.
Yeah, no, I've never
That
done
is gone. And I even think from Antonia's comments that the mortgage broker's relationship with those individuals has gone too. It's more about the relationship with the bank as opposed to the individuals.
And she's got to be, I guess she's got to be very clued up about what they provide, because essentially she's providing that service for her client, which is the person that she's broking that loan for.
Exactly. So to go with somebody like that then knows the ins and outs of the different banks and what bank may be more suitable, what one that she knows, because I think they go in cycles. So she may go, look, this bank just is too difficult at the moment. Their appetite for lending's not as much as maybe this other bank over here.
Because some people might come in and go, well, I love my bank.
Yeah.
And she said that, didn't she?
And
but then that might not be suitable for what you need.
Correct.
You can't split it across two.
Not one mortgage, unless you had... No, it's a bit difficult. Sorry. But you could go multiple properties.
Yeah, ding, ding. There was the silly question.
Not a silly question, because I think that goes through a lot of people's minds as well. Well, maybe we could split it between... If we could have a bit with this bank and a bit with that bank. Especially when the bank's... Maybe you're after, let's say, $600,000 as a loan, and the bank comes back and says, well, the most we can give you is $400,000. And then you go, well, maybe I could go to this other bank.
They do that. Like, they ask for... They say this house is worth so-and-so. Is that... Right?
So there's no guarantee, because they'll also look at your income and your serviceability. So you need to be able to service whatever. So it's all very well to say, a house is worth X amount, therefore we'll lend you 80% of that. If there's two limbs to the test, and that's the first test. The second test is, can you service the mortgage repayments?
Yeah, because it's all very well saying, I'd like this $1.5 million house, but if you don't have the funds or the income or the...
Correct.
Limbs?
Or the two limbs. Well, the two limbs was the one having a look at the actual asset itself, the house that's for sale, and having what they call the loan to value ratio, the LVR.
Oh, yes, we did mention LVR.
Yeah, and to see, does it meet that test? Can we, first of all, draw down a loan for 80% of the value of the house? And the value of the property, remember, differs between, Antonia mentioned that it could be... what it was on the day at the auction, or what they think it could be worth.
Yeah, depending on
the bank and the criteria.
Yeah.
And the second limb being the interest. Are you able to cover the interest?
And how are you going to pay that loan?
Correct.
Are you going to be interest only or fixed or?
And that's where also, if you're, let's say you were 60 and wanting to get a loan or a mortgage, the bank's going to be more reluctant to lend to you, given the fact that potentially you've only got 5 years of working.
Oh,
so
crazy.
How are you going to repay that back?
Yeah.
So that could be a little bit more difficult as well. But then she's got options.
I suppose, Tony knows all that. She'll know. Well, again, she's going to sit and listen to what the client needs, and then point them in the right direction for the right.
Correct.
Answer or response.
Correct. So, again, there is the benefit. It's costing you nothing. You're getting...
Yes, we talked about that.
Yeah.
So you as the client don't pay the mortgage broker. The bank
Correct.
pays. So whoever they decide to go with, then pay the mortgage broker.
Exactly. So she, or a mortgage broker, and she's so empathetic that she definitely would be, working in favour of you, the client or the customer, to be able to get the best deal for you, because the commissions, by the sounds of it, even though they might be slightly different, it sounds like it's immaterial or marginal anyway. So there's no benefit for her to say, well, we need to stick with this bank because she's getting a higher...
I like what she said about, say encouraging a client to maybe ask for more, not to get more commission for herself, but because it might impact the client's
And it saves
ability
you
to do
then-
something else with the house.
And it saves you having to then, like a year down the track, go, you know what, I'd really like to do it in my kitchen. We've
And
got
then
the
go through
funds,
that
and then go through the
process.
whole process again, just to get maybe a fraction of what you actually required.
Can you top up a mortgage? Like, how does that work?
So, generally speaking, we'd have to get Antonio to confirm this, but I would have thought, generally speaking, that it would be like a new mortgage
Oh,
in addition to, or they might, if it's a smaller amount, maybe $50,000, they will have an overdraft facility or the revolving credit that they talked about as well.
oh, she did talk about that, and we have one at home. You know, on our So that's another part to a mortgage.
Yes, so that gives you a bit more flexibility in terms of. So that gives you a little bit more flexibility in terms of you may have, let's say, a $50,000 revolving credit. You want to do up your kitchen, you can use the whole $50,000 now and then just make interest repayments. But then maybe you have a little bit more money, maybe you've got $10,000 sitting around and you've got to repay it. But then, oh no, something else has come up, we'd like to do our driveway, we'll pull that $10,000 back out. So you can, it's sort of ins and outs and ups and downs. Yeah.
You mentioned something about if you had a rental?
Yes, correct. So if you had a rental property or you were needing a revolving credit for your business,
Yes.
then you've got to be very careful with these because you have to be able to prove that the funds that you are taking out are for business purposes. So you can't just go and take $50,000 out and
So
then...
they're not as flexible when you're using it for business.
Correct. So,
and does that affect your cash flow and your...
Well, yes, from a tax perspective. So what I'm meaning by that is, again, let's use the example of you've got a revolving credit of $50,000. Let's say it's on your personal home. But you need some extra funds in your business. So you borrow it from the revolving credit and then send it over to the business. But maybe you take $30,000 for the business and you take $20,000 to go on a holiday. So you have taken the $50,000 and then you're trying to claim $50,000.
Oh, so you've got to be crystal clear about...
Yeah, because you need to be able to prove that the whole $50,000 was for the business activity, and you need to be able to show, you know, if the IRD asks the question. So you were doing an apportionment of the interest, you wouldn't be able to claim 100% of the interest.
Well, that makes sense. So there are tax implications.
Yeah, so just be wary of that. We try to stay away because especially as the clients get bigger, they can get, the revolving credit can get bigger and it can get quite messy. Trying to do an analysis of what's coming in, what's going out, was this for business, was it for personal? It's a whole analysis on its own.
I think I'll stick with colour swatches and let you deal with all that, Nicole.
We can do the ins and outs.
Oh, that's great. Okay, so is there a role between the mortgage broker and your accountant?
100%. And I always say I think it's really important to have all your team on board, you know, whether it's your solicitor, your bank, the mortgage broker, so everyone's on the same page, and your accountant, obviously, to have those discussions, that because if one person goes off, an expert on their own, and does something, it could have implications. So for instance, if the mortgage broker went and set this revolving credit up, but it was actually for the business, and maybe for whatever reason you as the client hadn't divulged that, but then you take the funds over and then there's these tax implications because you can't claim the whole lot, where in your head you're thinking I can claim 100%, but you actually use some for personal. That needs to be discussed and talked about.
Well, like any good relationship, there must be communication between all parties.
Communication is key. I always think a round table with everyone is great.
Oh, good. So, well, that's good. We've got you and Antonia are two good people to have on your team.
Exactly.
Oh, that's so interesting. Oh, that's a good roundup, I think, about mortgage broking and how to sort of use these good people to move
to get the
forward.
best outcome for you as well, and that they're working in your interests, and that, like you said, you're going to come out with the best outcome. They're going to give you some options and some strategies, and also refine what you have already submitted, so then it goes through credit a lot easier. Perfect. It's a bit more fluid.
Yeah, well, it makes sense. You've got to use people with the knowledge.
I agree. It saves time and money.
Yeah, well, I've learnt something today.
And it could be, you don't want any of those hairy little tax issues arising later on down the track.
No, we don't want that.
Exactly. Or the IRD knocking on your door.
Perfect.
Exactly. Right, well, that's a great way to wind up. I think we've had a great discussion on Antonia and her fairy godmother mortgage service.
Absolutely. And if you need to get in touch with Antonia, we have put her details in the show notes, her mobile, her email, and also her social media.
Fantastic. All right, Alex, I look forward to seeing you again next week.
Same. I can't wait.
We'll chat to you soon.
Thank you.
Thanks, everyone. Bye. Thanks for joining us on the Accountology Show. If you have enjoyed today's show, you're in luck because we'll be back next week. You'll find past episodes at plainsfm.org.nz and subscribe on Apple Podcasts or Spotify to never miss an episode. We would love it if you would leave a 5-star review and tell a friend or business owner who would benefit from hearing our show. We also love hearing from you, so reach out with any comments or a topic you'd like covered, and even suggestions for whom we should get in the studio next for an interview. You can find us on Facebook, Instagram, LinkedIn and TikTok. Our handle is NH Plus Associates, that's NHPLUS Associates, or email me, nicole@nh-a.co.nz. But most importantly, thank you for taking the time to listen to the show. Until next time, keep building that business into the empire it absolutely deserves to be.